treasure gold.
All right, cool. Good afternoon, everyone. My name is Moi Stern. I'm a data scientist at Messari. We are a research and data analytics firm for crypto. And today I'm going to be telling you guys why some people need to stop saying that crypto has no PMF or product market fit. And in particular, I'm going to be talking about 3 products that I think have definitely achieved product market fit, which are stablecoins, perps, and prediction markets. All right, let's start out with the skeptics' view. What do crypto skeptics usually say about crypto products? Throughout my life, at least in crypto, what I've usually heard is, one, that crypto products are irrelevant. They usually say things like, nobody in the real world uses crypto or any crypto products. Second is that the products are all market dependent. So essentially, if Bitcoin goes to zero, the usage of the products goes down with it. And third, they usually say that crypto products are all just speculative, that it's just gambling on top of gambling. And today we're going to talk a little bit about how to refute these critiques. So let's start off with how we define PMF, or product market fit. So what is product market fit? To put it very simply, product market fit is when a product meets a strong market demand and it has users who keep coming back to it because they value it. That's kind of the definition, but we can also measure product market fit. And in particular, stuff that I try to see with PMF is sustained growth in usage, users, and sometimes use cases. So, a product might start doing one thing, they become very good at it, but then they find like another niche, they expand to that and find PMF in that as well. Second is finding relevance, right? Like, is the product in the minds of the population? Do people know what it is? Are people talking about it? Is the media talking about it? Are governments thinking about it? So that's kind of what I consider relevant. And third is sticky use. Are people coming back again and again because they value the product being offered? That's PMF very broadly, but I think when we're looking at PMF in crypto, we have to get a little more specific. So a couple rules I have to have been included in this presentation are, one, the product needs to be used directly on crypto rails. So, we have exchanges like Coinbase and Binance. Those are obviously crypto products, but users aren't really engaging with the blockchains directly. So those won't really make it into my presentation. In the products that I'm talking about, people need to actually be using the blockchains and the on-chain rails. And second is that the products need to be permissionless. So anyone in the world needs to be able to use these without KYC. Some indicators of PMF in crypto specifically are, one, growth in volume. So a lot of crypto products involve the movement of money or financial transactions. So total volume is very important to measure whether these things are growing. And again, sticky users, like I mentioned previously. And also I want to see sustained relevance in mainstream attention through politicians, media, pop culture, all the above. So why does this even matter? Like, why am I even giving this presentation? So the reason that PMF matters is that if we build products that have PMF, it validates that the technology that we're building actually matters. And it actually confirms that people are using crypto products, not just because it's crypto, but it's because it's the best product. And I think it really proves that because it's on blockchain rails, it's become more efficient than whatever the alternative used to be. And also, like, most importantly of all, it tells us that we've won as an industry. All right, so the first product I'll dive into, probably the product that has the most PMF, is our stablecoins. So what are stablecoins? To put it simply, stablecoins are cryptocurrencies that are worth $1, a euro, or some other form of government-sponsored currency. They're essentially dollars on the blockchain. And because they're dollars on the blockchain, they have a lot of efficiencies in terms of money movement. For example, the other day I was driving by Santana, and I saw an ad by Western Union saying that it costs $4 to send money from Costa Rica to Nicaragua. If someone were to do that with stablecoins, it wouldn't cost them $4. It would cost them a fraction of a cent, and they would receive the funds immediately. So let's dig into some data as to how stablecoins have grown as of late. The data I'm showing now comes from a study from Artemis, which is another data analytics firm within the crypto space. And they're looking at 22 firms, so 22 companies who enable their users to use stablecoins, essentially. And if you see the chart, it starts in early 2023 and goes all the way to 2025. And we can just see very clear, sustainable growth in volume, for stablecoin volume. And there's a few sectors I'll highlight that have really grown in particular, and it shows like a variety of use cases for stablecoins, which I talked about earlier in the presentation. So the first one is B2B, business to business. So B2B stablecoins or stablecoin processes are leveraged for cross-border payments and supplier settlements. And this sector has grown tremendously. Just so you guys have an idea, in early 2023, there was about $100 million in monthly volume for B2B stablecoin transactions, and now we're seeing $6 billion in monthly volume in stablecoin transaction. The next one is cards. There's a lot of stablecoin linked cards, which allow users to essentially use their stablecoin balance anywhere in the world with any merchant. This is also beneficial for the merchants because let's say someone is paying them on the weekend or the holiday. With the traditional banking system, they'd be receiving the funds on Monday or whenever the holiday is over. But because the cards are linked to stablecoins, they receive the funds immediately, which can help them organize themselves a little better. It's just a better process, a more efficient process. In early 2023, we're seeing $250 million in monthly volume for stablecoin cards, and now we're seeing $1.5 billion in monthly volume. Next is peer-to-peer. I think peer-to-peer was like the initial famous use case for stablecoins. You can send money to anyone in the world. It's very easy. It's very cheap. From the firms that the study looks at, it's flattened a little bit over the years, but it's still annualized at $19 billion, which is very high. And I'll talk a little bit more about peer-to-peer in a broader context in a bit. And the last sector is B2C, or business to customer. And this is a very fast-growing area of stablecoins as well. Essentially, the main use case I see here is for payroll. So if you have a company in the United States and have a lot of international employees, the easiest way to pay them in dollars is through stablecoins. This use case has also seen tremendous growth. In early 2023, we were seeing $50 million in monthly volume, and now we're seeing $300 million in monthly volume. All right, so talking about P2P, the data I was talking about before only was looking at those 22 firms, but there's also a lot of on-chain transactions going on, people sending money from one wallet to another, and the growth here has also been tremendous. So here we're seeing USDC P2P transfer volume, and we can see that as of late, USDT has actually crossed $1 trillion in monthly volume, and USDC is approaching $1 trillion. So really, like, stablecoins are starting to compete with like some of the most largest financial institutions in the world, such as Visa and MasterCard, and you can see like the growth here is tremendous. It's sustained like that. That's a good-looking chart. USDT and USDC also has a lot of users. USDT now has over 2.5 million daily active users. USDC is approaching 1 million daily active users. So that's 3.5 million people sending money through USDC and USDT. There's a lot of other stable coins out there, but these are like the two biggest ones, so I thought I'd narrow it down to those two. All right, I'll be quick here. I don't love using profitability as a metric for PMF, but I think in Tether's case, it's important to talk about. So these companies are the top 10 holdings in the XFL ETF, which is like the main financial sector ETF in the United States. And if we look at Tether, it's actually cracked into the top 10. It makes more money than the S&P Global and is about to match American Express, which is obviously a household name in the world of finance. And the fact that a stablecoin company is doing this is just incredible. All right. All right, I mentioned relevance earlier. Stablecoins are extremely relevant. You can see just some headlines here. You're seeing things like Walmart and Amazon are exploring issuing their own stablecoins. In the bottom right, we got JP Morgan. JP Morgan has probably been the most anti-crypto institution in the world. And the fact that they're now like looking into building their own stablecoin is just, this really says like how powerful this technology is. Also Stripe, Stripe is one of the largest financial processors in the world, and their largest acquisition to date was Bridge, which is a stablecoin company. Shopify. Now, Shopify merchants can receive their payments in stablecoins. Last thing I want to talk about around stablecoins is the role of the government. So in the bottom right, you see Donald Trump signing the Genius Act into law. So the Genius Act is essentially a stablecoin regulation bill, makes it safe for users to use stablecoins in the United States. So yeah, again, like big companies are talking about stablecoins. The government is regulating it. They're thinking about it. So I think it's pretty clear that stablecoins have achieved PMF. Next, I'll be talking about perpetual futures. So what are perps? To put it simply, perps are a type of derivative in crypto that I think it's easy to understand if we compare it to like more traditional types of derivatives like options. So if you see the table on the right, we're seeing the prices of NVIDIA options. There's a lot of different prices, there's expiration dates, there's strike prices. Like you look at this and it's like, it's hard to understand like how you even arrive to a price. A perp, on the other hand, simply tracks the price of an underlying asset. So, when you're buying a perp, it just looks like you're buying Bitcoin, but you're really buying a derivative that tracks the price of Bitcoin. Perps are simple, and they have continuous exposure. There's no expiration date. So you could buy a perp and hold it in perpetuity, hence why it's called a perp. And then you can also buy perps with leverage, which is something that a lot of people like to use. Obviously, it's risky, but it is like a popular product in the world of crypto. So just for you guys to understand, derivatives are the most dominant form of trading in crypto. Of all the volume that goes around in crypto trading, 3 times the volume goes to derivatives than to spot. That means that there's 3 times more money going into buying crypto derivatives than to actually buying the underlying assets. And within the world of derivatives themselves, perps are the market standard. 93% of derivative volumes comes through perps. And then an interesting note from CoinGecko, in 2024, the total centralized exchange perp volume actually reached $58.5 trillion, which is an insane amount of money being moved. Perps are also relevant. Recently, the CFTC, another government institution, granted Coinbase permission to launch their own perps product. All right. Everything around perps is really cool and all, but to this day, the vast majority of the volume does come through centralized exchanges like Binance or Bybit. But something that really excites me, and the reason why I even added it to the presentation, is that we now have an alternative option in the form of Hyperliquid. Hyperliquid is a transparent, borderless, non-KYC exchange for perps trading. It is now rivaling Robinhood in terms of volume. For the past 3 months, Hyperliquid has actually beaten Robinhood in terms of volumes. Additionally, users can go buy spot assets on Hyperliquid, such as Bitcoin, ETH, and Sol. Obviously, it's very easy to send money to a Solana wallet and then buy some Sol there, or send some money to an ETH wallet and buy ETH there. But the fact that I can send my money to one exchange and buy the underlying assets is extremely powerful. And it provides very healthy competition to centralized exchanges. I think this chart is pretty cool. It shows you Binance's volumes with the red candles. They've crossed over $2 trillion in perps volume per month. And Hyperliquid, which is run by a team of 11 people and is, again, a decentralized alternative, is slowly starting to eat into that share. For the past several months now, it's had over 10% of Binance's share, which is just extremely promising. I also want to talk a bit about spot trading. So for you guys to understand the chart here, it's essentially the breakdown of spot volumes across all the centralized exchanges plus Hyperliquid. Those little green bars that are starting to come in the top right are Hyperliquid eating into the centralized exchanges volume. Just for you guys to get an idea, in August, Hyperliquid had 38% of Kraken's spot volume, which is insane. And on a single day in August, it actually beat Coinbase, which is just like a behemoth in the industry. So the fact that they were able to do that, it's just a single day, but I think it's still like very promising and just shows that there's a clear demand for people to use a decentralized alternative. I just want to make a note on speculation. So Earlier in the presentation, I mentioned how crypto products being speculative was a common critique. And it's a very common critique, but I don't think it's necessarily fair because speculators are still users, right? Like people have been speculating throughout the entire history. It's always been here. People always want to try to make some money. And I think if crypto offers them the best platform to do that, I think that's still a good product, which is like really what we're narrowing down this conversation to. Additionally, you might think, okay, this is still just a speculative product around crypto. But that's not necessarily true with the decentralized perps. Because decentralized perps are permissionless, technically anyone in the world could create a perp for any asset or any asset class. And we're starting to see that within Hyperliquid, actually. So HIP-3, it's basically an improvement to the Hyperliquid blockchain, which allows this thing that I'm talking about. Essentially, anyone in the world can spin up a perp for any market. So this chart on the left actually shows the NASDAQ trading on Hyperliquid right now. So this is extremely important because accessing, for example, stocks is very difficult in a lot of countries. But anyone with an internet connection can now go to Hyperliquid and buy the NASDAQ if they want to. We also have Ostium, which also offers decentralized perps. This is a different product, but thought they deserved a shout out here as well. Okay, last is prediction markets. Okay, so what are prediction markets? Maybe you guys have heard of these before, but these are kind of what prediction markets look like. To put it very simply, it's a platform where people can bet on the outcome of any event in the world. You see stuff around New York's mayoral election, stuff around sports in the middle, you see Heat versus Clippers, stuff around the government shutdown, stuff around the Fed's decision. Like you can bet on almost anything on these platforms. And the main two prediction market platforms are Polymarket, which is almost completely on-chain. You don't need KYC to go on there and play some bets. Kalshi is regulated in the US, but they're slowly starting to expand a little more into crypto. All right, let's look at some data. So if we look at the charts here, it's very clear that volume on these platforms peaked around November, which was the US presidential election. Then we had a very clear drawdown for a very long time. Volume was a lot lower than it was in November, but it's slowly starting to pick up, and let's see why. Sports. So Kalshi and Polymarket both recently launched sports markets, which essentially enable anyone in the world to bet on the outcome of any game. Kalshi in particular has seen tremendous volume in its sports markets. I think people in the US really like to gamble on sports or something. And they now have a legal way to vote. If you're in a state like California or some other state where it's illegal to gamble on sports, you can now go to Kalshi and directly place your bets there. And again, I'm mostly showing this because it shows a variety of use cases within prediction markets. Like it's not just around election events. It can be really tailored to anything. That's kind of what the sports markets look like. I think they need some improvement, but I'm sure we'll get there soon. All right. So clearly, you see those charts, it seems very cyclical, right? There's a clear peak around big events. We saw a big peak around the November election. We're seeing a peak again around sports season with the NFL and college football and the baseball playoffs. So, it does seem a little cyclical right now. But that's not necessarily a bad thing, right? Just because a product is cyclical in nature doesn't mean it hasn't achieved PMF. So if you think about products like TurboTax or Fantasy Sports, those are extremely cyclical products, but they have found PMF. I think in general, we peaked at around $2 billion in weekly volume around the election. Then we fell to around about $500 million a week in weekly volume. Now we're growing again past $2 billion. We'll probably continue to see growth until the Super Bowl, I would suspect. But I think in general, if the lows get higher throughout time, you get to see that really there's an increased baseline demand for this thing. And I think that's really important to determining whether we continue to see PMF. But yeah, I just want to make a note that just because it's cyclical doesn't mean it hasn't achieved PMF. And then I also want to make a note about how Polymarket and Kalshi, they are speculative tools, but they're also extremely important for ingesting information. I personally use Polymarket and Kalshi a lot, not for betting, but just for understanding what people think around the world. You're literally able to see where people are placing their money at for any event in the world, and I think that's extremely powerful. There might be people who are closer to an election or to a war who have, more knowledge as to what bets they should place, but I do think that everyone in the world is curious, and this is just a great tool to satisfy that curiosity. I think it could become a very important part of people's news ingestion. But yeah, in general, being able to see what people think is going to happen is very powerful. And in particular, seeing where they're putting their money at is even more powerful. And I think, we talked about the data around the speculative nature with the volume, but I wish I had some traffic data. I couldn't find any, but I think that could also be a very clear indication of PMF, right? If people are constantly visiting this platform or these platforms to see what's going on in the world. Prediction markets have also become very relevant. I took that picture last week, I think it was, as the New York City mayor election was coming to an end. That's in Madison Square Garden, which is one of the most transited areas in the world. And this is an ad, but still, the fact that so many people are seeing this on their way to work just tells you that it is going to be on the minds of people. Zoran Mamdani even referenced his Kalshi odds at a speech. I think he said something like, Cuomo's super scared with my Kalshi odds or something like that. So the fact that it's getting referenced so much in the media and by these very relevant people signals a lot. So I want to talk about products in crypto beyond the three that I just mentioned. There's obviously a lot being built in crypto that I didn't mention here. For example, Pump.Fun is a token that's grown tremendously over the past year. Essentially, it's a platform where any person in the world can create a token with just a few clicks. Millions of people have used the platform. Millions of tokens have been created. So you could say that it has achieved PMF within that vertical, but I didn't want to include it in my presentation because it's still very confined to the world of crypto. Pump has started to explore other venues, for their business, in particular streaming. And I think there could be something interesting there with streaming and financialization. So I'm pretty bullish on that, but it's yet to be seen if it's actually going to be a mainstream thing like the other three products I mentioned. And then L1s and L2s have also obviously achieved PMF as infrastructure, right? Like Solana, Ethereum, Base. But their product, which is Blockspace, is still mainly consumed for crypto native activity. So again, these are all great products. I use them a lot, obviously. But what gets me really excited are the products that maybe non-crypto natives can use. People who don't know so much about crypto, it's very easy for them to use a stablecoin, to use a perp, to use a prediction market. All right, so to sum everything up, I think the three products that I mentioned have a very clear common thread. And that thread is giving financial access to everyone. So essentially, these three tools are really exemplifying this thing that crypto is democratizing access to financial tools that were once reserved for a few. Stablecoins give everyone access to the dollar. We might take that for granted in a country like Costa Rica, but there's a lot of countries out there where it's very hard to access the dollar, where countries are ridden by inflation, where moving money across borders is very, very expensive. So stablecoins provide a clear upgrade in efficiency there. Next is perps, right? I was mentioning how anyone can trade the NASDAQ now. Perps can give you access to trade any market in the world and to do so with leverage. Obviously, leverage is risky, but the fact that people can get access to it very easily is, it's promising. And then prediction markets. I don't think prediction markets were a huge thing in the past, and I think if they would have become huge before crypto, it would have probably been confined to one single country. Like United States, you need to probably show your ID. But now anyone in the world has access to bet on the outcome of any event in the world. So I think, these are all extremely powerful. And yeah, in general, they just give access to people to stuff that they didn't have to before in terms of financial tools. Yeah, so next time someone says crypto has no PMF, just remind them of these products that are widely used outside of crypto, have a ton of use cases, super interesting to talk about. And yeah, that's about it. Thank you. In my sorrow, into treasure gold.